This is for lesson 1-3. I'm going to do the work together and the on your own, and then I'll also go over a little bit of this lesson's application problem as well. So this workbook is on page 11, and in the textbook it's on page 22. The instructions are the same. We're just going to be putting in our plus and minus signs. So I'm going to jump right into the transactions for the work together on page 22. The first transaction, it says received cash from sales. So what we will do for this one, we received cash. So we will go ahead and put a plus in for cash because our cash is increasing. And then we received cash from sales. That is actually going to be affecting our capital account. And I am going to write revenue next to it because when you do the application problem, you will need to classify it as either revenue, withdrawal, or expense. So it's increasing our cash and increasing our capital account since we made some money. We made a sale, which is classified as revenue. Second one, we sold services on account to Harmon Co. So sold services on account. These people did not pay cash for their revenue, for their sale that we just made. Instead, Harmon Co. basically charged it to us with the intent to pay it at a later date. So the amount that Harmon Co. owes us is increasing. And then we also sold services, which is basically just another word for making some revenue. So our revenue, which is going to be our capital account, is increasing. So the only difference between these two transactions is with one of our sales, we've received cash for it, and the other one, they charged it on account. The third one, we paid cash for a cell phone bill. A cell phone bill, this is going to be classified as an expense since it's something that we need to do to keep our business operating. But we paid cash, so cash will receive a minus. And then our capital account is also going to decrease, and this is an expense. You can tell there's a lot of things happening to the capital account in this lesson. On the fourth, we received cash on account from Harmon Co. So since we received cash, cash is increasing, and the amount that Harmon Co. owes us is going to be decreasing. So here they bought, so I'm just going to put buy, and here they're paying on account. I'll put buy on account. Sorry, it's so small. I put buy on account and then pay on account, so you can see the difference there. And our last one, the owner withdrew equity in the form of cash. So this owner is taking cash out of the business for personal use. So cash is getting decreased, and the amount of capital is also getting decreased. And this here is going to be a withdrawal, since he is taking out money. On the back side of this, we have the on your own, which is going to be the same type of thing. So I'm going to jump into it. In your textbook, it's still on page 22. First one, we sold services on account to Bethany Center. So what happened was Bethany Center bought some services from us, whatever it was, but they bought it on account. So the amount that Bethany Center owes us for accounts receivable is increasing. And we made a sale, which is going to be classified as revenue. So our capital account is increasing as well. The second one, we received cash from sales. Our cash is increasing, and we also made revenue, which is going to increase our capital account as well. The third one, we received cash on account from Bethany Center. Since we received cash, cash is increasing, and the amount that our accounts receivable Bethany Center owes us is decreasing. The fourth, the owner withdrew equity in the form of cash. So the owner is taking out cash for personal use. Our cash is decreasing, and our capital amount is also decreasing, and this is a withdrawal. And our last one, we paid cash for rent. That's a very common transaction. We're going to subtract from cash because we just paid with cash. And we're also going to subtract from our capital account because that is an expense, which is any operation we have, anything we have to spend cash for operation of our business. So next is the 1-3 application problem, which I'm only going to walk you through a little bit since it's a little bit different than our work together and on your own. For this one, it's going to be the same as the previous application problem where we're using actual dollar amounts. The only thing is with our capital account, we need to write in parentheses whether it was an expense, withdrawal, or revenue. So whatever we write an amount in our capital account, we need to put in parentheses what it was to keep track of it. Now this starts on page 26 and 27 in your textbook, and it's on page 16 in your workbook. The transactions start on top of page 27. The first one was done for us where we paid cash for rent. So cash is going to be minus 400, and then our capital account will be minus 400 as well as an expense. Now our second transaction, it says owner withdrew equity in the form of cash, $150. So the owner is withdrawing cash. They are taking out cash. So we are going to subtract from cash $150. And this is also going to take away from the owner's equity account, from their capital accounts. We will write 150 here, and then we will put withdrawal in parentheses. Our next thing we need to do would be to calculate our new balance. We're running pretty low on cash. Cash is now going to be $175. The accounts receivable is still at 0. Supplies is at 200. Prepaid insurance is at 300. Accounts payable at 200. And then our owner's equity account is going to be at 475. And if you were to add your left and right side of the accounting equation, they would equal out to 675. Our third transaction, we received cash from sales, $900. So cash is going to increase by $900. And our owner's equity account will also be increasing because our capital account is increasing by $900. And we will need to put revenue in parentheses behind it. So our new balance going across, cash is $1,075. You can see these ones we have not had to use yet will still stay the same, but we still record the balance going down. And then our capital account is $1,375. You'll need to write small and you need to write neat as well, because what could happen is you could be writing like this 3 going down and it could slowly turn into an 8, and that would be incorrect. The fourth transaction, paid cash for camera repairs, $100. So paid cash, we know that is going to decrease our cash account. And if we look at camera repairs, we can classify that as an expense. It would be like repairs expense, which would decrease our capital account. So for our capital account, I will do minus 100, and I will put in expense. And then once again, calculate the new balances going across. On the fifth transaction, we sold services on account to Eden Wedding Planners, $400. So we sold services on account. Sold services, that's like making revenue. And this was on account to Eden Wedding Planners. So those are going to be the two accounts that we will use. The amount that Eden Wedding Planners owes us is increasing. So they will get a plus $400. And we made a revenue, we made some sales here, so our capital account will increase by $400, and that will be revenue. So no matter if we get cash from sales or if we make a sale on account, it's going to increase our capital account. We want to record the sale at the time of the sale, not when cash is received. So we'll put 975 and put our new balances going across once again. 1675. Okay, on the 6th, we will receive cash from sales, which is just like the 3rd that we did. So I'm not going to do that one. On the 7th, we paid cash for charitable contributions. We can figure that as an expense. And then the last one, we received cash on account from Eden wedding planners, which will affect our cash and our wedding planners. So hopefully this helps get you through it. Make sure at the end here, these two and these 4, that they equal. So when you add, sorry, I was confused. So when you add these two totals up for your liability and your owner's equity, that total needs to equal the total you get from your assets account to make sure that everything is in check and correct.